And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
Therefore, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to all my fine futures friends and family. It's time for the market prep, and we certainly have a lot to prep for the markets today. It is Thursday, January the 19th. My name is John Hoagland. Thanks for trusting me with your time. If you're already active in these markets, hopefully you're on the right side and managing risk well. That's one of our goals here on the market prep, is to always think about accurate context, always thinking about risk management first, and remaining patient in our trading. I'm reminding myself that I need to stay patient today. I know there's a lot of opportunity and a lot of possible big opportunities, possible big profits, also possible some big risks. So I'm going to try and just remain calm and centered, as we always like to say here. The economic numbers this morning, 7:30, the housing starts numbers came out, and permits. Starts were a little bit higher, permits a little bit lower. Jobless claims, initial jobless claims dropped to 190,000. I guess that's about the lowest since about October. Continuing jobless claims also fell slightly. But the talk of the town is the Philadelphia Fed Manufacturing Index. They were looking for down 11. It came out down 8.9, which is less than they were expecting. Smaller contraction, but contraction nonetheless. I don't think that really confirms the New York State real big drop on Tuesday. Today, a less of a drop, less than expected of a drop for the Philly Fed Manufacturing Index. All of this is going to be digested through the trading day today. We also, at 8 o'clock this morning, Fed Susan Collins speaks, 9:30 nat gas, 10 o'clock crude inventories, 12:15 Lael Brainerd is due to speak, and those are the only the only talking Feds that I see on the schedule this morning. So we all are well aware that stocks are set to continue lower into this batch of economic numbers. Again, most importantly, and probably the most viewed, is going to be the Philly Fed numbers. I don't think that it necessarily corroborates the New York Fed that we saw on Tuesday. Earnings today, Procter & Gamble beating expectations, Truist Financial also beating Fifth Third Bank with mixed numbers. Everybody will be watching, I'm sure, Netflix after the close today. If you're not watching the stock, maybe you'll be watching something on Netflix. Crude prices dropped yesterday. Well, it seems the demand du jour changes minute to minute. That's what I'm seeing, at least in the news, as to why the market broke yesterday. Lower expectations for demand. It's demand one day, lack of demand the next. The API last night at 3:30 announced a 7.6 million barrel increase in crude stocks here in the U.S. We just had a big boost last week. We had a big boost by the API last night. EIA is expecting a small loss of 600,000 barrels. I'm betting that that's probably going to be way off today. So we've got a lot to watch for as far as our crude traders are concerned. Make sure you're paying attention. That EIA petroleum status report, again, due at 10 a.m. Central today. Nat gas 9:30, crude oil 10 o'clock. Don't forget, if you're trading crude, you should be trading the March contract. We rolled to March yesterday. Volume started higher yesterday, so we moved to March. Charts have been moved to March. Everything should be March if you are trading crude oil. You'll notice the difference in the dome if you are still looking at the February and then you move to the March contract. The VIX this morning up about 7% last I checked, 2166. Of course, the market is moving lower. The fear index moves higher. The dollar index right around at 102.41, not too far from where it ended the day yesterday. The yield on the 10-year also not too far off from where it ended the day yesterday at 3.4%. A pretty big rally in the treasuries yesterday as rates dropped, and maybe a little bit of the flight to quality started to step in, quite possibly, with stocks tanking yesterday. All we've really done in the S&P is that we haven't even, well, I think we've removed the profits, we've removed the upside that we put in last week. Not so much in the NASDAQ. NASDAQ holding up much better. We're going to see all this in the chart shortly. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you can get notifications when we do go live. It is Make Hogue Money Thursday after the prep here. I've just put the link in so you can register for the Zoom meeting. You're more than welcome to watch it on YouTube, of course, but if you want to be able to vote, you're going to have to get into the Zoom meeting. Good morning, Jules. Good morning, George. Lacey is laying where the Christmas tree used to be. Caprice 101, good morning. Oh, by the way, Jules, you win the prize this morning. ES claimed the untouched 3920 point of control, should have placed the order last night. Well, there may be more opportunity in that area as we go through the day today. Stay tuned to As the Market Turns. Terry King, good morning. Caesar Shaw, good morning. Denise, I haven't seen you in a while, Denise. Hope things are going well for you. Brody JM, Joel MB. Joel, you cracked me up this morning. I hate it when I mean to buy seedless grapes, but instead I accidentally get, well, Oreos. I was cracking up and I was thinking, for me it would probably be Chips Ahoy. Laura McLaren, good morning. Octoraps, good morning. Vince, my guy. Bill, Jason, Jimmy, Rooster, Sarah Hall, players and love to you. Steven, good morning. From Atlanta, SR. Orion, good morning. Mike Fries, good morning. Dowitzer, Razmik. Frank S., good morning. Dan Trader, Haggle Matters, good morning. Frozen Gumwad, be interesting to see what happens on the heat map today, where all the money will be going. It's always fascinating, isn't it, Frozen? Andy Bleed, what a drop in the ES, right? Travis, good morning. James, Rusty Golfer, my spirit animal, good to see you. Looking at ES support at 2,900, Travis, and to 2,890, and resistance at 39.34 to 43. Good morning. Good morning, Mike H., JT Irby, good morning. And the Dr. VJ is with us this morning. All right. We have a lot to discuss. We've got the Make Hogue Money after this. We're going to jump right into the charts so we can get a lot done in a short amount of time this morning and get to Make Hogue Money. Make Hogue Money promises to be an interesting one today. I'm looking forward to seeing your trade ideas. Good morning, Don. So let's go ahead and jump into the charts here. You may notice you've got the little picture of me down in the corner, something we discovered on the production platform. So it was suggested that I do that. So looking at you, got to put my glasses on so I can see. Got to have the cheaters. So this is the daily in the S&Ps, obviously. Yesterday and the day, and for a couple of days, we've been saying that the upside move has been struggling. I've got on my notes from yesterday, last week's high, this purple line here, is pivotal, which means long above, short below. Now, I didn't catch this move. I for some reason, got stuck in my mind and in my bias that we were going to be accepting above that level and seeing price moving higher, even though we've been saying the upside is struggling. We need new business, and we didn't get that new business. I really took a deep look at what happened yesterday and how I missed the relatively strong nuances that we're saying this market is not doing well after the open yesterday. When we put in the high, we couldn't hold above the overnight high. We couldn't get to the previous day's high. There were a lot of things that doesn't go. Just kind of thinking about what I was thinking, what I was doing yesterday, and a lot of the reason that I did not respond to that, I think, was I was pretty distracted yesterday morning on the open in the S&Ps. There were things that I was doing, things I was thinking about. I didn't really have my focus on what the market was doing. Don't do that. Don't do that. I mean, I didn't lose money yesterday, but I missed a really good opportunity to catch at least a part of that move to the downside. So I'm going to try and remind myself, don't do anything else for that first half hour. In Make Hogue Money, we're focusing on it, but don't do anything else in that first half hour. Focus on what you are supposed to be doing. So, it seems yesterday's economic numbers were taken literally, not necessarily from the lens of the Fed and rates. Okay, they weren't good numbers. Good numbers have been bad for the market. Bad numbers have been good to the market. Yesterday, that seems to have switched. Last week's low is now in play. I mean, we could feasibly see price go back all the way to last week's low. We started last week here. We've taken out basically all of last week's rally in the S&Ps, not so much in the NASDAQ. Open interest, we lost 19,000 contracts in open interest. Well, I guess we had a lot of trapped longs up there that just had to bail yesterday. Volume was good, not tremendous. Not tremendous. Even in New York, it was 4.1 billion shares traded, which isn't big for a big down day like this. So kind of wondering how that volume is going to continue. So yeah, I guess we removed all of last week's gains. Let's take a look at the shorter time frame chart. I've been wondering if we've been having a video feed problem. Okay, it seems like it's okay now. I see about a 10-second delay, and that seems just about right. So if we are having issues, let me know. Look, apparently you are. But if it persists, please let me know. Not doing it. Okay, thank you. All right. So here's the 30. Well, a pretty emotional downside move, very toothy. It took all day for the volume profile, the volume point of control to move down to this level. I mean, it took all day for that to happen. So the volume was higher initially. We've certainly usurped that now. We did put in a late spike yesterday. Settlement is 39.45.75. We have overnight inventory to the short side. Okay, our overnight inventory, the weaker hands overnight traders have been selling into this market, pushing price lower. If I'm going to be looking for opportunities for sales here, I'm probably going to try and stay patient, let the overnight inventory unravel, giving us a possible opportunity near a gap close, or the base of the late spike is all the way up here, 39.56 quarter. I'm not saying that's going to happen. If it does, it gives us a decent opportunity, or at least reference to limit risk. The rules for the late spike, to remind you, when the market opens flat out below the late spike, it's the highest acceptance of lower pricing. Inside the late spike, it's secondary, but it's still acceptance of lower pricing. Opening above a late spike to the downside is rejection of lower pricing. Obviously, there's a pretty high probability we're going to be opening with a gap below the late spike, which is the highest probability of acceptance of lower pricing. That's what's got me thinking to look for opportunities to sell strength. And we're already seeing a little bit of a pullback off this low. As we get closer to the open, you may see more of our overnight shorts getting more and more nervous and bringing price back towards better trade locations for shorts. Here's the TPO chart. Okay, here's our basically a double distribution trend day yesterday with the late spike showing here the M period late spike. Our overnight high in the late spike. Sellers coming in and moving price lower, opening with a gap. We have traded down to this naked point of control in extended trading hours. I'll look for a check of that in regular trading hours as well. Yesterday, the IB high was the upper extreme of yesterday's range. So a lot of this is going to depend on the overnight inventory for early opportunities. If we get an adjustment in opportunities at the gap close or the base of the late spike, what I worry about is value area special situation play. Opening out of range, reaccepting inside value from yesterday, which value is all the way to the low because it's based on the position of the point of control. If we do accept, that could bring us all the way back up to 4,000. About. So watch for reacceptance of value from yesterday. Watch for rejection of value and the late spike to the downside. Take a look at crude oil now. Crude had a big pushback to the downside yesterday. It did increase in open interest about 8,100. So we got some sellers accumulating shorts up there. No new market state yet. Was looking forward to that yesterday. It did not happen. If it wasn't rollover, that open interest would be indicating new sellers, but with rollover, volume and open interest is a little bit blurry. Price continues to be yanked around by demand expectations. Medium time frame balance remains intact. Roll ends tomorrow. Take a look at the 30. So here's, I don't think this is correct. Yeah, I suppose it is. Okay. All right. So unable to hold above weekly kickoff, 81. Unable to hold above last week's high. Overnight inventory has been is no inventory to speak of now. We've still got some weak structure targets below naked points of control. This little gap down here, another naked point of control. And when we kind of look a little bit further away, the trend line, the upper trend line of the channel that we're in, held us yesterday. We get another look down here towards this trend line, I will look for an opportunity or maybe a bigger opportunity because it allows me to limit risk. We're in range, below value, no overnight inventory, no runs, no hits, no errors. It looks like we've got the opening range at the low of the session after coming back into range. To me, that's a kind of a friendly look there. So here's the opening range, opening about 4 minutes ago, 79.65 the low, 79.91 the high of the opening range. Taking out the high of the opening range and driving higher tells me buyers are in control, at least for the time being. We've got a whole nasty range above to repair. Look at what happened in crude yesterday. The volume point of control is all the way up here. The TPO point of control is all the way up here. We spent all this time down here. Look how low the volume was. Interesting. Now to the NASDAQ. While the S&P and the NASDAQ are related, they are different. Take a look. Here's last week's low in the NASDAQ. S&Ps were all the way down here. We took back all of the gains from last week. We have not done that in the NASDAQ. NASDAQ is presenting as stronger. We added 3,300 in interest to the downside yesterday on volume. That's what I'm calling it. That is an industry term. The volume is We do see some pretty stiff rejection above last week's high here in the NASDAQ. This is excess on the daily chart. We got too expensive. Buyers wouldn't pay it. Just took over. Are they still in control? It would appear so. The longer term balance still intact, much the way the S&P's is. It's not really going to help us today. What about the 30-minute chart? Overnight inventory to the short side. This is the TP. This is the point of control that we are dealing with this morning in the S&Ps. The NASDAQ is holding up stronger. Overnight inventory short. We did have a very kind of a short late spike in the NASDAQ. Take a look at the TPO chart. The IB high is the upper extreme of the regular trading hour session range, much the same as the S&Ps. Here's our late spike. Here's where we're trading. We're opening below the late spike. Even though it's short, opening below it is the highest degree of probability that we are accepting lower pricing. That's all that says. It doesn't say sell it now. It says look for opportunities to sell strength until proven wrong. Proven wrong, value area special situation play. Acceptance inside yesterday's value area might be enough to prove it wrong. We could come all the way up to the base of the late spike and reject. But if we spend too much time inside a value, that's going to mark acceptance and rejection of lower pricing and possibly bring price all the way to the high of value, which brings us all the way up to the 11,641. So we have some really good context and some really good potential hypotheses. Trade the hypothesis that is coming true. Again, in the S&P and the NASDAQ, we have some substantial overnight inventory. A lot of weaker hand shorts in this market. If they give us the opportunity to see a better trade location for shorts at higher pricing, I might be patient enough to look for something like that. Gold. Okay, last week's high, resistance. We thought we were maybe breaking out of this little bull flag. Maybe we will today. Open interest dropped by 3,000 yesterday. That would be expected on a bull flag. You want narrow ranges, which we don't have yesterday, but we want lower open interest and we want lower volume. We did put up some pretty decent volume yesterday. Remember, we are 2 weeks from rollover in gold. Volume was pretty good yesterday. It's kind of unnerving for longs. Inside the extended trading hour range. We are inside yesterday's extended trading hour range. Is this a pullback or is this going to end up being a reversal? To me, this feels like a pullback more than a reversal. I've been wrong. Yes, I have been wrong before. Where are we? Overnight inventory. Not really. Maybe we're a little bit long, but we are now open. I believe we opened below value. We are in value. There's a whole bunch of repair that is quite possible for us. And where we are right now, I would say probable. We're going to see if maybe we get back up to the point of control here, which is the high volume node above price. We're spending time where volume was low and there wasn't a lot of time to repair any business that didn't get done here yesterday. The markets tend to do that. It's a visual thing. That's what I was kind of hoping for and doesn't look like is going to happen, was an opportunity for us to see price back against this trend line. Now, it wasn't a real strong trend line, 1, 2 points of contact, but it was really kind of our breakout point of this if it was a bull flag. If we get the opportunity, which looks like we did, here in the overnight, but if we have the opportunity to see an execution down near this trend line, it would allow me to limit risk. I'm not quite sure how to handle gold today, so what I'm going to do as my primary hypothesis is, here's the TPO chart. Yesterday's high was the high of the initial balance. Look where we opened. We have a distribution of time and volume here. Have we traded to this point of control? We have another distribution of time and volume here. The point of control for the whole session is right there, but I would also call this the point of control for this area of distribution of time and volume. We're right in the middle of it. So my primary levels that I would look for opportunities would be this point of control or the point of control from the lower distribution, which I don't think we've necessarily hit yet. We call that repair. Let's get into the euro now. Similar, but a little different. More range bound than anything else here. Short time frame balance, we're calling this. Upside digestion, perhaps. Open interest did increase off that high yesterday, adding 4,800, making me think we may have trapped some shorts here. But balance and breakout rules apply here. Yesterday's high, yesterday's low really are the important levels here. If we get to yesterday's high and we can't accept above that, we look for the market to rotate back into balance. If we break out above and accept, then we look for the market to go in that direction. But again, we're not too far from weekly kickoff high, which could be a stumbling point for continuation to the upside. Here's the 30-minute chart. Overnight inventory was long. It's now really kind of reconciled. Inside the range, I'm going to try and stay patient. We seem to have put in a base here. Perhaps a little bit of demand here. We did take a look down to that at 7:30 and we rejected. So this might be an interesting opportunity for us so far in the overnight rejecting value from yesterday. On to the 10-year. So pretty big move to the upside as rates dropped yesterday. Flight to quality, perhaps. Maybe this is part of that rally. We did break out above a bull flag yesterday, and we did continue. This is what I would look for in a breakout above a bull flag. Take a look at the 30-minute chart. Ooh, see, here's our bull flag, small ranges, lower volume, the breakout that happened night before last, the continuation that happened in regular trading hours. That was some pretty decent momentum. We're getting a pullback towards last week's high, low of value from yesterday. Interesting area to throw a line in here. Take a look at the TPO chart. The low from yesterday is the lower extreme of the initial balance. We've opened, we've really there was basically a late spike here. Not sure where we opened, but for now we're rejecting that higher pricing based by that late spike. And let's take a quick look at natural gas. So we did break out of this balance to the downside yesterday. Market attempting to continue that. We do have some support at weekly kickoff low, which is $3.14. It is now entering rollover. It's going to roll next week. We did have volume and open interest increase on the breakout to the downside. We had a 12,000. Again, that is now going to be a little bit blurry because of rollover. Take a look at the 30. 7:30 number really knocked it around. Actually, that's 7 o'clock. I don't know what that was about. But look where we're going to just kind of returned right back to the congestion area that we have been in basically all night. No overnight inventory, no runs, no hits, no errors, nobody left. I'm not going to be doing much in this, or if anything, even if I was trading it. Here's the TPO chart, normal variation day. Low excess really on both sides, unfilled gap. A little bit sloppy as far as structure is concerned to the downside. A little bit sloppy, a little bit. So, all right, here we are. So it's anybody's guess as to what's going to happen. Anything can happen. Anything will happen. So, make sure you are keeping your knowledgeable trader in the forefront of your mind. Hey, good Fred Decker. Good to see you. Rick, my brother, you're here. It's good to see you. Nice of you to come. We got Make Hogue Money. I'm looking forward to seeing you there. Orith, my pleasure. I'm glad you're finding it useful. Fred, does the shape of the profile yesterday display lower seller confidence? I saw multiple distributions. The point of control is an anomaly, and the profile was 7 TPOs wide. Does it show a lack of confidence, lack of seller confidence? With a move of that magnitude, Fred, again, looking here at the loss of open interest. A loss of open interest on a move like that isn't showing confidence. It's showing lack of confidence to the upside. But we'll take a look at that. If you're coming to Make Hogue Money, remind me, and we'll kind of take a look back at that and see what we're looking at and see what you're talking about. These three factors are rarely a coincidence. How do you know how much overnight inventory there is? When I look at where the market opens at 5 o'clock Chicago time, if price moves significantly higher, I view that as overnight inventory to the long side, because the overnight is filled with shorter time frame, weaker hands traders. The big players aren't trading in the overnight. So we can then assume if price moves higher, we're accumulating longs. If price moves lower, we're accumulating shorts. And again, it's the shorter time frame, weaker hands traders that are creating that inventory. And they're the quickest to get out. So we look for overnight inventory adjustments to give us opportunities and sometimes to give us better trade locations for moves in the opposite direction, which was what we were talking about today. All right. When regular trading hours open, is it better to switch volume profile to regular trading hours, or shall I keep the ETA, extended trading hours? I like to separate the two. If I'm looking at overnight information, I'm looking at the high and the low, and sometimes the point of control. Sometimes overnight profiles can point out weak highs and lows too. Do institutional algos run at night? I don't think so. When you look at the volume, the institutional HFTs and algos are a big part of the daily volume. Okay? All right. Good questions. Let's get to Make Hogue Money. We can discuss some more of those questions once we're in there. And then, of course, you always have group coaching on Mondays and Wednesdays. Had a great session yesterday. Got a lot of requests for the recording, so that makes me happy. And hopefully everybody enjoyed the session with Jared Tendler last night. I thought it was fantastic. And again, we're going to be doing that once a month with Mr. Tendler. All right, let's get down to business. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Get out there and profit. Don't forget to be kind to yourself and others. Say a prayer for world peace. And we'll see you in just a few minutes and Make Hogue Money. There may be a reflection today. I'm not sure that they're going to be doing the podcast, so you may see me again at the end of the day if you so choose. Would love to see you. Anyways, trade well today.